This is Short Hammer. It is the 4th of December, 2019, and we're taking a look at Amazon. Now, this is on the 15-minute chart. And if you notice, I want to just do a quick breakdown of what happened yesterday. So, yesterday we fell and we were down here right around the 1747 ish, 1748 area, which is the bottom of our supply demand zone, which is 1748-ish, 1747-ish by the 1762s. And what happened is right around this time, news came out that Amazon had this new chip that was 40% better than what Intel had, which sparked this reversal to the upside. And we bounced off these levels, held the 1756, pushed through 1762s, and right into close, we kind of nipped the 1770s. And you'll see that we based after hours, but then gapped up pre-market, held, and pushed up. Now, we were looking for a little bit of turbulence as we pushed into the 1784, 85-ish area, and this is why. If you look back to the pre-market on Tuesday, I believe this is, you see this top here right around the 1784 area. And if you go back to, I believe this is Monday, that initial sell-off candle, we bounced here at the 1784, 85 area twice trying to find buyers and finally rolled through to the downside. So this was an area that we were watching to see if we saw any selling activity. And we could even push a little bit more this way. And we see us pushing up into this candle structure here. So I was trying to place an order here. I had a few different things going on. I was in Tesla, Nvidia, so there were a few things going on. So my execution on this was not crisp. So I actually did not get filled on this order. I wasn't paying that much attention to it. You know, you have your quad charts up. You sort of take the best setups and just put your line on the water and see if anything bites. And they didn't fill me. And from this level, we just saw selling action, and we tried to find a little bit of buying action here at the 1776, fell below that, back tested this area here, the pre-market levels, flushed through there, and went through the post-market levels, and we're just dropping down. And after hours, news came out that the antitrust scrutiny has increased on Amazon's cloud business, which I'm telling you, that's not great news if you're long Amazon. I'm glad I'm not. So we'll see where it goes. But right around that 1756 after hours. So what we want to watch tomorrow is we want to see if we see a push up, if there'll be any type of buying pressure that could run right up into this 1768 to the 1771, 72-ish area. So we want to see what we do at around this area here between the 1768 and 1771. If we see strong supply and selling pressure, then we're going to fade this back down through the 1762s, potentially through the 1756s and lower, maybe testing the 1747 area. If we see the buyers stepping in and the supply just moving out of the way and the demand is strong, pushing through here, back testing, holding this area, then we're going to ride this up through the 1776s, 1780s, and potentially look to get out here if we're long. But we're going to follow these levels and see what we get tomorrow. But that's my plan for Amazon tomorrow, to seeing, hey, at the open, when the cash session opens, who's in control, buyers or sellers, and also keeping an eye on the overall market and market trend. Will we be trending up? Will we be trending down? Will it be a range bound day? Today was kind of interesting because a large part of the day we kind of went nowhere in the overall market on many tickers. And Amazon actually was directional all day. So we'll see what we have tomorrow. We're right around that 1756, the swing door area I like, where if we stay above, we'll see some buying action. If we get below, we'll see some selling action. And this is actually the bottom of the channel 1747 by 1833. Beneath this level's lower channel, that's about 1745, 46 ish by 1705. We'll see if we crack that, and if we see some more selling pressure to the downside, we'll see what happens tomorrow. But I'm definitely watching the 1756. And as I mentioned earlier, if we buy up from this area, I'm not going to fade the 1762 initially. I'm going to wait to see if we can get an extension up into the 1768 to 1771 area to fade that, or if the buyers step in and we hold and we push up to the 1776, a back test and hold to try to get long for a push up through the 1776s into the 1780s. That's my plan. If we open and we go below the 1756 to 1747, I'm going to wait for a back test of the 1756 area to fade that down, or a break of the 1747 low portion of my supply demand zone. And I'll be looking to on a back test to fade this down to my 1730 area. And when I get in on a trade, and I know this is going a little bit longer than I intended. When I get in on a trade, I'm not watching the 15-minute chart. I'm dropping to either a 5-minute, a 2-minute, or a 1-minute, depending on how volatile that ticker is on the day. Remember, right now we have a lot of PR flying between the White House and China. They're trying to win the battle of PR and media, and we have to be careful on plays that at any moment news can come out that may totally flip the market direction. So you really want to be careful and make sure that you're just keeping an eye on the the overall market, but also whatever play you're in. As you get to each level, don't be afraid to scale out shares or scale out contracts. If you like this video and you'd like to receive more videos like these, please tap the like button and subscribe to our channel, Power of Pivots. And you can look forward to receiving more videos like these, and also videos from Elisa with her pop strategy.